we've got Thanksgiving week, which, I was looking at this morning. Did you guys know seasonally that this is one of the historically best weeks for seasonality in risk assets? Typically, Thanksgiving week is really strong for the S&P. It's really strong for the NASDAQ. And I'm curious to see what you guys think. I mean, in some ways, it's a quiet week, right? Because U.S. traders will be kind of off the desk starting Wednesday, Thursday, Friday should be pretty quiet in terms of U.S. participation. But then again, seasonally, it's a pretty strong week. Part of me wonders if maybe it's all the U.S. people going home and watching football and they're just in a sportsy mindset. So they all start buying stocks. I don't know if maybe that's got something to do with it, but I don't know. Ivan, what are you thinking? Have you noticed that trend before, the Thanksgiving week seasonality? Have you heard of that before?
100%. And what I think it is about that somebody wants to pay for the Thanksgiving dinner, and they need the money, so they pump it up so they can comfortably pay for the turkey.
Yeah, maybe those big hedge funds, they have like a huge company party, and in order to pay for it, they're like, hey, let's give that thing a little bit of a bump so we can pay for the big Thanksgiving feast at the office. So I don't know, but it's an interesting anomaly, and seasonality it's a real thing. November has been a really good point about that. We've seen a really strong month for risk on assets. Frank, what do you think? You and I was talking about you just before about our S&P concept with, prices at resistance. What do you need to see in order to stay in your S&P trade? I know you've got the same trade on as I do. What are you looking for this week on S&P?
Break in 45.25 is where the highs were established, and then we saw a pullback, and now we're just kind of in this consolidation zone. Last week I was not very bullish just because of how quickly we run up, and if price can break this level, then it will look more promising on a technical scale. But I still am very hesitant on this, on I guess risk on assets overall. I know we're going into a good week. We have PMI data too coming out, so it could add to the overall confidence in declining inflation and things like that. But I think if we continue this trend, if this is just a decision zone and we break higher, then I don't really see any reason to be bearish. Just right now I'm a little hesitant, just because we gotta see at least something here. Price looks like it's going up higher and then it just comes back down. Well, I guess we're seeing higher lows, but still this constant, at least a double top here. If we can't break that, then the resistance is probably too strong. It's just a battle between buyers and sellers right now. But I think what we got to see is a break, and that's what I'll be looking for. And then that's what we'll go into AU and EU trades on that as well.
Want to stay up to date with all the latest trading information? In the description below, you'll find the link to join our free Discord. The Discord gives you instant access to lots of helpful material like free trading courses, chart analysis, updates about what's happening in the A1 community, as well as discount codes for our other products and services. The best part, all of this and more is 100% free. So go down in the description below this video and check it out for yourself. If you're interested in upgrading to the full VIP Discord featuring our team of expert trader signals, you can use the live chat link in the description to get connected with one of our team members in seconds. So don't wait, go check out the free Discord today.
Yeah, and I was going to ask, while we're on the topics of, of course, risk sentiment, another what seems to be big winner here as we kick off this week is, as I mentioned, the euro. Ivan, do you have a thought process on the euro? Is this thing getting overextended? And how, if somebody is on the sidelines, if they've been waiting on this? We talked about it last week. What are your thoughts on the euro at this level?
You know very much, Nick, that something is never overbought until it falls. This is going to continue
That's a fair point.
until there's 2 Thursdays in 1 week. So this one is just going to continue. This one is going to at least 110, 111. Are we going to see 120? I don't know. But this one is, as you can see, very aggressively higher. So this one is not going down. At least not until the next CPI.
I think that's fair. And you look at just the, here's something that's kind of interesting about on the fundamental side, Ivan. When you look at the ECB versus the Fed right now, there's something I think it's really worth pointing out. ECB versus Fed. Both of them are in a quantitative tightening mood, right? Or I'm sorry, they've been in this quantitative tightening mood. And when you look at the comparison, there's of course rate hikes. That's one side of it, but there's also of course their budgeting, right? Their balance sheet. And what we see here with the Fed is that they're actively reducing their balance sheet at a rapid pace. When you look at the ECB, they're not doing so much of that. Yes, they've raised rates, but they're not necessarily as aggressive in cutting their balance sheet. Now, the reason I point that out is when you take a look at that, that could be something that in some ways points towards some bullishness from the Fed. But I think it's very interesting to keep an eye open to that, to that point, which could perhaps the euro could continue to push higher. But if you get some flip on the ECB side, if they start to reduce their balance sheet at some point, that could also be really meaningful to the euro trade. I think right now the markets have been so dollar bullish that there's this whole unwind trade. And as you pointed out, what seems overbought could just be beginning. So I think it's really hard to try and fight this trend. Yes, you've kind of got some resistance looking left, but overall, I would generally agree that this secular shift in the dollar looks likely to continue to the downside for now. I mean, there's the euro. I was making this point earlier about this downward channel and how, some people might want to say, hey, you know what, maybe I'll play the dollar for a bounce here. And while I think that maybe it does work out, I think most likely, even if that is the case, if you think there's due for a bounce, what if it trails much lower before it gives you a bounce, right? The path of least resistance here, the momentum seems to be to the downside, especially in a week like this where you get that seasonal risk on drift. So I don't know. I think that's my bias on the dollar as we approach this week.
I had a bit of fun this morning. Your morning, at least my morning and my afternoon. But we had a meeting today. Great turnout, by the way. Great turnout. And the the takeaway from that meeting was when you don't know what you're doing and you think you know what you're doing, you don't have half the knowledge that you should have in order to be trading. So my point is there was some entries in there that I was like, have you ever tested this out? And the answer was no. I've never tested this trade setup out. So has anyone tested this kind of situation where euro is making new higher highs? Okay, so where do you want it to go? So my arrow is coming all the way down to 108.20. Okay, why? Because when euro becomes a bit too aggressive in the short term, it has a bit of a deeper pullback, and I don't want to be caught at 109.30 instead of I want to be caught at 108.20. So because I've done that many times before, and I'm going to do that many times in the future.
Sure. I also want to ask you guys about this concept as we get to the end of the year. And we've seen the dollar this year has kind of gone both directions. First half of the year, it was pretty bearish, right? You came into 2023 and you saw, a lot of optimism that the Fed was done. And then, of course, we had the narrative shift where it was like, nope, inflation is still a serious problem. And the dollar rallied. Now it seems like we're kind of leaning back into this again. And, you look at 2023 as a whole for the dollar, it's been all over the place, in terms of it was down, it was up, and here it goes, kind of coming back to normalcy. I think that it could kind of end out being a year where the dollar index just kind of stays flat as we approach into 2024. And I want to ask, I know there's a lot of people in the chat who are asking about gold here. In terms of gold, I want to go to Frank with this. Gold has had a nice little, it seemingly has found a new low, a new bottom here, and has been putting in these higher lows and higher highs. Do you think if the Fed is done, then that could lend towards the dollar staying weak for a while and could potentially be bullish for gold? But Frank, what do you think about gold? Are you looking for any trades, or what are you waiting for to get you interested?
So after this head and shoulders pattern kind of finished off, it's now starting to look, I guess what you could say is mixed. But like you said, if the dollar is continuing to trail weaker price-wise, it's inversely affected on gold. So gold will likely rise. And it's like the same news we see for inflation, PMI, CPI, whatever. If it comes in lower, that's good for gold. It's good for the indices. Gold is just, it had that very extended run to the upside and just needed to get some selling out of the way. People are taking profits. Came down to this pretty important support zone in the 1930s, bounced straight up from that. Overall trend, I think, is still to the upside. So I think it's just a matter of me taking action, because I've been on the fence for all these risk on pairs. I've been on the fence for gold. Once I bought the S&P and saw how fast it ran up, it made me want to, I had to reconsider, well, these targets were hit way sooner than I thought they would be. So
sure,
things are still looking.
And Frank, I want to ask you, so you're thinking, longer term, the trend still looks good. I want to make this point though. Here's something to think about with gold. And I'm going to come back to Frank and then go to Ivan with this. So right now, the markets are kind of celebrating, risk on is celebrating this idea that you have at least until the end of the year. I think that this trend is very confidently why I'm staying so bullish stocks. The economy has seen some meaningful and slowing, and inflation also seems to be normalizing. We're seeing some success in the inflation side. The question, I think the next battleground for bulls and bears is going to be the idea that, is the economy going to slow just enough to get us into kind of a healthy range and then stay there? Or is there a scenario in which, yes, the economy is slowing and people are celebrating, but what they don't realize is that all those rate hikes are then going to lead us into economic contraction. And in the case that you get economic contraction, things get really interesting really fast. In fact, a recessionary environment can be very bullish for gold. A deflationary environment can be very good for gold. Now, if you're wondering why that is, it's because that is when the printers go back on, and that is when inflation fears start to ramp up again. So I want to go back to you, Frank, real quick. Do you think, obviously none of us know what that economic data is going to end up being. None of us know if scenario 1 or scenario 2 is going to occur. But think about it from this perspective. It's possible that both scenarios are actually pretty good for gold. If we get scenario number 1 and we see the economy kind of slowing down, but not totally collapsing, and we get the soft landing, the dollar could be weak, and that weakness could attract higher prices for gold. And scenario number 2 could actually be more bullish for gold. If you get an environment where the economy, yes, it slows, but it slows way further than what people are thinking it will. And that's where we enter into potentially a deflationary environment. Now, of course, I'm speculating here wildly because none of us know what this economy is going to do. The economy is an inherently incredibly difficult thing to predict. But my point here is that both scenarios, I think actually gold could look pretty attractive. What do you think, Frank? And I'll come back to Ivan with the same concept.
Well, I think you're right, but I think the likely option we have here is, just based on what we've seen, is inflation is not going as quickly as we initially thought to the downside. So even though it is declining, I think it's likely to continue at least to the target where they're looking at 2%. I don't necessarily think that it's going to be a deflationary environment where we get inflation well under our target. I think once we get there, the Fed has been very transparent this whole time. I think that they're going to maintain that target, whether it's trending lower or higher. They're going to work to get it to that target and maintain there. That's why they're always talking about how it's gonna take a while for things to get back to normal. So even once we hit that target, that's still not the end. It's got to stay there, and it's got to stay around there at least. So I think what we're gonna see is now that we're at the end of the year, we haven't seen any more hikes from the Fed. Inflation is still coming down to where in the direction we want it to go. So we still have a ways to go there, but I'm pretty sure, just depending on everything we've seen from CPI and different inflationary metrics, that we're going to hit that target probably next year. And I think it's going to stay there or around there, and that's going to be kind of a perfect environment for indices. At least gold will likely do its own thing, but seeing that target inflation, and then the idea from investors' minds that like a year from now, 2 years from now, we're not going to see any hikes, that's going to be the prime motivator for bullishness on those things.
Sure. Yeah, good answer, Frank. And I think, this just reiterates to me with the S&P trade, which I know we both have. It is a trade for me, because here's the thing. We don't know which scenario 1 or 2 is going to occur. And I should say that this is kind of also inflation, like the inflation war that we've been fighting with the Fed and watching those numbers. If that inflation number comes down, and as Frank, you're pointing out, it normalizes at a good range around 2%, and we get that soft landing environment where things are okay, growth is not destroyed, but we can kind of hover in that good range, yeah, stocks are going to fly. But I don't know that is going to happen, and none of us really truly do. So I think that reiterates why it's a trade for me. Till the end of the year, I think that we're in this phase where inflation continues to come down and we look good. But then next year is a question mark. Are we going to enter into, okay, now the economic growth is not stopping or it's not normalizing, it's continuing to drop. And in that case, that's why the S&P idea is still a trade for me, because I don't know what's going to happen there. And again, as I mentioned, in this scenario, I think gold longs are the play, and we'll watch out for that as we go into the new year. So that is going to be heavy on my mind. Ivan, what do you think? I mean, obviously, as I mentioned, economists get it wrong all the time, so we're not going to be able to know with certainty what's going to happen. But how do you kind of follow my thought process here? What do you think, and how do you play this from a trader's perspective?
Taking inflation one by one, 1 month at a time, and look at the trend overall, because that's the proof in the pudding. Are we gonna have soft landing or not? Merca says that they have spent, or their record on credit cards. Is that spending going to end, or is it not? We also have been seeing inflation, at least earlier this year, falling, and then it paused in the summer, fall. And to be honest with you, we just have to do like Fed. We are data dependent. We see how things goes, because if you take one pullback, one takeaway from this year is we didn't do a recession. But that was the major fear like 1 year ago. Oh, recession 2023. Oh, what's going on? We're going to crash. We're going to die.
Yeah, no, you're right, Ivan. That has been to the point that I was making about economists being wrong. this year, January, it was like the economists were screaming, this is the year of massive recession. You do not want to be in equities. Meanwhile, the NASDAQ is up 45% on the year. So again, this is why trading is hard. This is why investing is hard. This is why, people in the audience who have been here with us for a while, we are in here every day doing the work, because this stuff is inherently very difficult to predict. There is, conflicting viewpoints from the smartest and best traders in the world speaking on, panels all over the world. There's a reason why this stuff's hard. It's because markets are not that predictable. But I like your point, Ivan, and I'm with you totally. Watch the trend that's unfolding in front of us. We are in this phase, and that is again why, reiterating my point with the S&P trade, it is a trade. It is not a, I'm just full blown, predicting that this is going to happen. Although this would be great for my idea, staying long indices and we get that soft landing. I think it's a good point. Be data dependent, as the Fed has said. We don't know. They don't know what's going to happen, so we can't assume we do either. So I like your point. I think that's really, really important. Take the new year when the new year gets here, and we'll be back on the streams covering it as always.
Don't forget to check out the links in the description if you want our broker recommendation, access to our free Discord, free Edge Finder, or want to chat with us on Telegram. Remember, you can watch us live in the markets every morning starting at 9:30 a.m. Eastern Time, and we have lots more free trading tools and content available on our website, a1trading.com. Thanks for watching.